Hello. Okay, right. We've got audio. This is what we wanted. And we can start making our way through. Let's just quickly post this forward to. Right, okay. We're live. Got a bit of a sore throat, so bear with us. We are going to wait for some people to get in here, and we are going to start in about 15 minutes. We're just getting everything set up. We're just getting everything set up, guys, and making sure that we get a few people in here before we start. If you do have any questions, guys, you can comment down below. The comments are active, I believe, and in there you'll find in the comment section you'll find announcements, etc., as we go. But yeah, hopefully this live is a success. Pretty sure it uploads straight away once the live ends, so we'll double check. We'll go into that one and have a little look afterwards. It's going to take about maybe about 2 hours, I imagine. Might be a little bit quicker, but we'll see what happens. I managed to get the mic set up. We are using one display though, as opposed to the two, because the mic port gets covered by the USB, the HDMI, which is annoying. So I need to get that sorted at some point. Hopefully, as we go though, everything goes smoothly, and we can get as much information. Guys, I do recommend though, before we do get started, that you do get a notepad, and alongside that notepad, I recommend a nice coffee. We're just gonna wait a little bit because obviously we told everyone it's gonna start at past, so I'm gonna try and stay true to that. How was the audio sounding? Everything sounds good, I hope. Let me know how the audio sounds, guys. I'm hoping it sounds reasonable. Let's have a little quick check, make sure that can be heard. I'm just going to quickly turn this up in settings as well a little bit. Oh, sweet, cool. Right, let me just turn this up a little bit. How does that sound? Is that not too aggressive, or is that all right? I woke up this morning with the most congested cough, and I'm like, of all days. Showing you, John, as a top fan. Uh, so I can see the chat. I can see how many people are in the live, which I don't think that's a true number, but we're just going to make sure that everyone sees that. So let's just go, everyone, join link. I'll be starting in 10 minutes. Dum, 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 dum. So we're not only just going to be doing the slideshow, we're going to be doing live examples as well. So we will be jumping over to the charts for everyone to see a live example of what we're talking about, so you can see it in practicality as well. pretty sure I can edit this live afterwards, and I can cut this bit out anyway, so it starts basically on the beginning. We're going to get started in 10 minutes. Just waiting for some people to join in, and obviously they can ask questions as well as we go. Let's see how the next hour goes. Just turn the heater up. Got a heater. I bought a heater for the office today. What is the title? Free Forex Crash Course for Beginners. Hopefully we get a few new faces in. I'm gonna shout out the Discord as much as I can as we go. Just check the audio again. Make sure that's fine. So I've got a microphone on charge as well. There we go, that was charging. Welcome guys, we will be starting soon. Just making sure I've got everything ready. Comment section is active as well, so everyone, if you've got any questions as we go, I'll try my best to respond, but obviously I'm on a bit of a mission to get this all done in one shot, so I will try my best to respond though. Is that lined up? There we go. Ashley, welcome man. How's the audio sounding? We are gonna get started in 9 minutes. Let me hear the audio. We're gonna get started in 9 minutes. Oh, it's quite good actually. Yeah, good. Can you clear? Brilliant. That's what we want. That's what we want. Got a feeling most of these people are going to watch it back because a lot of people were voting for a later time to start. But want to try and be done before my trading sessions. My trading session starts. Any questions as we go? Just comment down below, and I'll try my best to respond. It's not showing the true value of people that are in here. It's not showing how many people are in here, because it's showing me as 0 people, but then people are typing in the chat. If you give us a thumbs up in the comments, guys, we'll just so we know that there's people here. 6 minutes, 5 minutes, 5 minutes, 5 minutes till we start. Any questions though, as we go, type them in the chat and I'll respond and try and answer them so it clears things up for you. Okay, while we wait, I'm just going to add one more thing. I need these screenshots. Yeah, you can do that if you want, Ash. You can share that, man. That's fine. Right, let's just quickly add this in because right, we need to get a slide in under that one. There it is. Skin view calculator. This will make sense in a bit, guys. I've just remembered I forgot to add this in. And then with the screenshot, and then this screenshot. So I need some screenshots in here. We'll be starting soon, guys. Don't you worry. I got you. I got you. Oh, did I not get all 3 screenshots? So I did. 1, 2. So I got the ones that we don't really need first. Okay. Save. There we go. Right. Go to that. Drop these in. So we want to go this one first. One valid spotted. Oh, that's not good. Welcome, peeps. Don't forget, guys, ask questions as we go. I gotta be careful not to close that tab down because that is the most important one. It's fine. We can look at these on my computer. It's fine. I'll just open all of these. Ready to show you guys. All right, there we go. Cool. Get rid of this slide then. There we go. Right. I guess we'll get into it. So welcome to everyone. Basically what we're going to do is we're going to give you the core principles of trading today. Everything you need will be in this video, and if it's not, if I have missed something or I've overlooked something, please privately message me in the Discord and or leave it in the beginner section in the Discord, and I will answer that question. You are going to want a notepad because there's going to be a lot of information to take in. And obviously, if there's continued support in the Discord. So if you've got any questions or you're struggling with certain things, you can leave them in the Discord, and me, myself, or one of the other team members will get back to you and support you in whatever you're looking for. So we're going to jump straight into it. And yeah, the live chat is active on YouTube, guys. You can ask questions as we go. I will try my best, like I said, to respond to them. But we're gonna jump straight in. So first thing that you need to understand in trading is the directional bias, right? Understanding the direction of the market. Understanding the direction of the market is the most important thing because it determines which way you're going to be trading, right? So we're going to go over to a live example of determining how a market moves. But first of all, I want to show you exactly the three different kinds of trends that you will face, right? So you'll face bullish, which means the price is going up. You'll face bearish, which means the price is going down. And then you will face consolidation, which means the market's moving sideways. Now, in today's example, we're going to be looking at trading both the bull and the bear markets, and we're going to be avoiding consolidation, right? Consolidation, price is just moving sideways. It hasn't really decided the direction of the market. Maybe it's stalling for a reason. Maybe there's news coming out. But the market, we do not want to be trading this in today's example, right? You can trade consolidation if you've got a strategy, but today we're going to be focusing on the two main ones, the bulls and the bears. So the three different types of trends, right? We just talked, they go up, sideways, and down, right? Now, what creates these market conditions is we have, for a bull market, we have higher highs and higher lows. So price is putting in higher highs and higher lows. So this low is higher than this low, and this high is higher than this high. And then once again, we come up, we've put a higher high in, so it's higher than this high, and this is a higher low, so it's higher, but then it's just put equal highs and equal lows. So that's a consolidating market, right? Price is consolidating, and for us, we want to be having opportunities to keep buying. We can't really buy in here or sell in here. Yes, you could sell the tops and you could buy the bottoms, but we want continuous trend. We want continuous flow. Same in reverse for the bear market. We have lower highs. So this high here is lower than this high, and this low is lower than this low. Okay, so sorry, this low. these always give me a little bit of a tongue twister. This low is lower than this low, and this high is lower than this high, and that creates a bear market, right? Very simple principle, but it looks picture perfect on the chart like this. But when you go over to a real chart, which we're about to jump over to now, you will see there's a huge difference and there's a lot more noise as well, right? So if we jump over to a position I took last night, it was a perfect example of what we've just looked at. So as you can see, it's a lot more noisier. It's harder to identify the points of where it swings. So this is a consolidation down here, right? Equal highs identified here, okay, and equal lows. And then the market started to trend. So we put in a higher low, so it's higher than this low. We put in a higher high, another higher low, and then it sort of consolidated again, which it will happen. It doesn't necessarily mean the market's going to fall off like it does in our example, but it continued up and then we consolidated again. So we started moving sideways, and then the behavior of the market changed. Sorry guys, I've got an awful cold. So here is where the behavior of the market changed. Okay, so we got a little consolidation here. Prices come down, pulled back, and created that lower high. So it's lower than this high. Okay, then it's put in a lower low and another lower high. So it's lower than that one again. Another lower low, another lower high, another lower low, and then the market has gone bullish again there. But that's what we would call a pullback. Okay, so price is pulling back. It's not necessarily changing its behavior. It's not we're going to go, okay, we're going to start buying now, because we're still in this structure here. We're still below structure. Okay, so we're still pushing down. The market's just taking a moment to breathe, like it did over here. It pushed up, took a moment to breathe, so it's accumulating orders, and then it's pushed off again. Okay, so we'll come back to all of this later on. And let's move on to the next thing. Does that make sense to a lot of people? The simplicity of price action in practicality versus reality, it can look a little bit more messy. So we'll have a little look again on the chart, and we can find potentially where price is showing it's in a bearish market. So once again, this is the top, right? So we've sort of got a little consolidation going on here. Price is pushed down. There's the low. There's the high. There's the lower low. There's the lower high. Okay, do you get where this is going? Very simple, but it can look a bit messier on the actual charts. This is where it gets a bit trickier, because when you look at a perfect example against reality of the market, overall, in hindsight, you can see that's a bearish market. But when you can't see any of that price action, it's like, okay, how do I identify that the behavior is changing? And that's dependent on conditions. It's dependent on pair. It's dependent. It makes sense across all pairs. Like, it will be the same thing across all pairs. Okay. The market structure will be the same. A bearish market's a bearish market, and a bullish market is a bullish market. Consolidating market is a consolidating market. Okay. So that's how we identify the trends of the market. Okay, there's only three. There's bullish, sideways, and bearish. So finding key levels on the chart using multi-time frame analysis. So I use 3 different time frames, which we're about to have a little look at here. So we've got, let me just remove everything. Up in the top left of your chart, you will have a bunch of numbers. If you star them, like I have, add them to your favorites, you get a little selection here. If I click on the star there and the star there, you get some more numbers. But basically, this 4H here means every single candle is 4 hours worth of data. So from the wick up here to the wick down here, that is 4 hours worth of data. So each individual candle is worth 4 hours. So you'll see as well on your chart, you'll have a little 4 here. So that means every single candle, so that's 4, that's 8, and so on, right? So this candle now has 3 hours and 23 minutes left before it closes and a new candle opens. Now, this is where people get confused. Stay with me, pay attention. But each individual candle is 4 hours. But if you click on a different time frame, you're seeing the last. So let's have a little look. Let's see if this works. Let me try and put a vertical line. There it is. So what I'm going to do is I'm going to put a vertical line on either side. So when we go down to the 4H, okay, showing a bit of previous data, but so each candle is now worth an hour, right? So each candle is now worth an hour. So 1, 2, 3, 4. So them 4 candles there. Ooh, don't know why it's gone all squiggly like that. But 1, 2, 3, 4. Them 4 candles are that one candle there. Okay, so them 4 hour candles, 1 hour, 2 hour, 3 hour, 4 hour, are one 4 hour candle. Now, this is when it gets a little bit more complicated because now we're going to go down to 5 minutes. So each candle is 5 minutes worth of data. So obviously you count up so many fives to make an hour and so many fives to make 4 hours. So in that 4 hours, you get a lot of what looks like a lot of price action, right? And this is where people get confused because it's like, well, on the 4 hour, we're not going to use this one because it's not a perfect example. We're going to use gold because it's just going up. On the 4 hour, price is showing it's bullish. Then you scale down to the 1 hour and you're like, okay, it's still bullish. You scale down to the 5 minute, and before you know it, well, price is no longer bullish, it's consolidating. So what do I do? And this is where things start to get a bit tricky. Things start to get a little bit complicated, but it's fine because we just want to pay attention to the overall sentiment of the market. So we only want to pay attention for our directional bias to the 4 hour time frame, right? So the 4 hour time frame. What happens there is we are looking, right, at this market as a bullish market, which means we're looking to buy, right? The market is bullish, so we're looking to buy. We're not looking to sell, we're looking to buy. There's no reason to be trying to sell this market because you're lowering your probability of being right because you're going against the trend. That's why the saying, the cliche saying is, the trend is your friend. Go against the trend, lower your probability of being right. Increase your probability of being right, follow the trend. Okay? So once we've determined the trend, we then want to scale down and be like, okay, 1 hour is supporting that it is also bullish. Now, when you get down to the 5 minute time frame, this is when you start to look for the nitty gritty, the details that allow you to enter the market, right? Because the 5 minute is our entry time frame. The 1 hour is our supportive time frame, so it supports the bias of the 4 hour time frame. So when you get down to 5 minute, you want to have reasons to buy. This is when you start building your rules and start building your strategy. So there's consolidation here. Okay, so what we'll say, just for an example, if price breaks up above and comes back, right, it's broken out of its consolidation now, so it's continuing its bullish trend. If price breaks up, pulls back, and rejects this, so you can get what are called doji candles, right? So you can have a little candle that looks like this, right? So you have a candle that closes up here with a huge wick into this beautiful level here. If that happens, we are going to buy, right? That's what we're going to be looking at. So you then go, okay, brilliant. Price has created this wick. Price has rejected that area. We are looking to buy. So now it's supporting on the lower time frame, buys. So we are going to buy, right? So let's just say you buy there and you take your position there. Brilliant. Now, going back, we'll come back to this bit, right? We'll come back. This is just an example of what the multi-time frame analysis is for. Now, how do you find key levels on a pair, right? So key levels are levels in the market where price has significantly rejected or found support or resistance, right? So up here is a key level. This is our 4 hour time frame. This is a key level here. Price has rejected this area. Huge wick here. Nice little doji candle here. Price is closed below every single time on these candles. And we've consolidated below. And then once again, we've rejected. Once again, another key level would be this swing low here. So a swing low is when price pulls back and then bounces off, right? So nice swing low, bunch of rejection candles. A lot of rejection means there is price holding there. So if price was to come down to this level, we could potentially see price bounce off this level, right? So that's what we're looking for. But what we've also got to pay attention to, guys, is it's pointless put in a key level. So if we look at price, right, this is a 4-hour time frame. If we look at price and we put our key level there, what do you see wrong with that? Well, I'll tell you what you see wrong, right? Price is going to take so long, potentially weeks, to get to that level. So you're paying attention to a level that is irrelevant for a long time. We just want to find key levels that are close to price. Okay, so even this swing low, yes, it's a key level, for example, but it's not a level that is going to be touched tomorrow. Unless we have some major news, the market crashes, the dollar crashes, we ain't going to touch that level tomorrow, right? So where is our next key level in here? Well, it could be here, where we've got multiple wick rejections. Obviously, this is very messy price action, but it could be here where we've got multiple wick rejections and we've got body closes. There could be another key level in here because we've got more rejection here. So we're going to pay attention to the one that's closest. What are we looking for? If price comes down, we scale down and we look to buy potentially off this level, and we take our trade into this other key level up here. Okay, but this is consolidation, so we don't really want to be trading this, but this is just an example, right? So that's how you find your key levels in the market. They're significant levels close to price. Don't try placing a key level there. That is a key level because, once again, swing low, huge reaction. So if price touches that again, it could potentially create a similar reaction or a strong pullback. So don't go placing the target there because it's going to take hours and hours, potentially days, potentially weeks to get to that level. Only pay attention to the key levels, excuse me, close to price. Okay. So let's go back over to our slide and move on to the next topic. Right. So let's just do a quick recap. 4-hour time frame is for key levels and market bias, right? Market bias. What's the market's bias? Is it bullish, bearish, or trend? Is it trending or is it consolidating? Is it trending, meaning is it bullish or bearish? And is it consolidating, meaning is it moving sideways? The 1-hour time frame is where we find targets and confirmation. We'll go back all over this one towards the end. The 1-hour time frame we use for targets and to confirm our 4-hour time frame bias. So if it's bullish on the 4-hour, we want it to be bullish on the 5-hour. Okay. The 5-minute time frame is our entry time frame where we're seeking to get into the market and ride our trade into our 1-hour time frames. Entry targets. Okay, so next one. Once again, we are looking at what is all of the time frames in detail. So 4-hour, identify major structures, swing highs, lows, supply and demand. So support and resistance or supply and demand, they're very similar things. Mark key zones and set overall bias, bull, bear or range. So we're identifying the trend once again. And then we add confluences, which we'll see later on as well, with the 200 EMA, which is a little white line or blue line or green line that just goes through the chart, which gives us a confluence and builds confidence while looking for our trades. Then the 1-hour is to confirm the 4-hour and look for targets. Okay. Confirm 4H bias, fine-tune levels. So basically we adjust these levels, just tweak them. Maybe they need to go down a little bit or up a little bit based on the 1-hour time frame. And then we look for our targets into swing lows and swing highs, which we talked about, those potential key levels. Look for confluence, order flow, retests, and momentum. So we're just looking for a bunch of confluences that support our overall bias. So on the 1-hour time frame, we want to see orders being generated, which means there's momentum in the market, which you can see from large, strong candles. And you want to see some retests and momentum in the market. Then obviously we'll come back to our 5-minute later on. Risk management, the most important thing about trading and my favorite thing. This allows you to survive and see tomorrow, So if you have shit risk management, you will fuck your account today and you won't be able to see tomorrow to trade. So why is risk management so important? Because it allows us as traders to stay in the market long term while having a rough patch. So we could be having a losing streak, and if we've got poor risk management, that losing streak could be the end of our account or the end of our trading journey. But if we got good risk management and we go through a losing streak, we can survive through that drawdown, and we can come back out on top when we find our winning streak. So risk to reward, we'll be looking back at these as well, but pay attention to them now. Risk to reward is so important. So if you've got a 1-to-1 with a 20% hit rate, so meaning out of 100 trades you only win 20, you will not be winning. If you've got a 1-to-2 and you've got a 20% hit rate, you will not be winning long term. And if you've got a 1-to-3 with a 20% hit rate, you will not be winning long term. So I always say to people, right, you need to be looking for a 1-to-2 as a basic. So that means when you lose 1%. When you win 2%. Now, the numbers are a bit off here, but it's about 33.3% hit rate. So that means you win about 33 of the trades out of the 100, right? So 33 trades out of 100, and that allows you to be profitable with a 1-to-2 edge. Obviously, with a 30% hit rate, if you can push it for that 3% gain, you can have that low hit rate, and that's still with a 1-to-3 be profitable. And obviously, these are pushing boundaries: 1-to-4, 1-to-5. These trades don't appear all the time, and it does take a better trader to be able to execute on them. So what we're going to be doing, guys, is we're going to be sticking to the 1-to-2s for this cheat sheet. We're going to be sticking to the 1-to-2s because it's a good ratio, it's the basic ratio, and then you guys can go off and build on it once you've mastered it. So this is what it looks like when you place it on the chart. Okay, so this is a 1-to-1. So 1% loss, 1% gain, 1% loss, 2% gain, 1% loss, 3% gain, right? So you can push between these two. So you could go for a 2.5. So when you win 2.5%. And when you lose 1%, right? Always try and risk 1% of your capital or less, especially when you're learning. If you're going live straight off the bat, calculate your risk, what you are comfortable with, because what you don't want to do is risk 1% per trade, but you find that you take 6 trades in a row and they're all losses, and those 6 trades, that's 6%, that triggers emotional an emotional reaction within you, and then you start revenge trading, and then those 6 losses, which could have been the end, and then you start have a winning streak, become a congestion of losses, and then you start over leveraging, you start over risking. So risk, I say 1% minimum. No, sorry, 1% maximum while you're starting out, but you could go like 0.10%. Whatever you were comfortable with, just stay below 1%, and it will sustain you long term in trading, right? Overextending trades. Now, this is something I have spoke to a few people about. Overextending trades is another killer of traders. Okay, so when you set your target, it doesn't mean you've got to ride the trade all the way to the target. Okay, so when you get a bit better, you can ride the trades. So you can go for your 1-to-6, 1-to-7, whatever you think you can get out of it. But if you're only going for 1-to-2 at the moment, this is what happens, right? So if you overextend your trade, so let's just say that this take profit here is 100 points, right? And this stop loss is 50. Over here, that 100 points, so it's the exact same move, right? Prices come down, we've entered, but then it's wanted to retrace and come back.
it stopped us out because we've overextended the trade, meaning we've just tried to extend. They're both the same size positions. They're both 1% risk. They're both 2% reward. But I've overextended, meaning my stop loss is way too big. It's way past what it needs to be, and my take profit is way past what it needs to be as well. So overextending your trades can also kill your trading long term, because you find you're getting stopped out of break even, or you're getting stopped out completely for the 1%, and then that hit rate becomes lower, and long term longevity in trading, it just doesn't work. Okay, it doesn't work. So overextending trades for the sake of having 10 points extra stop loss, just to try and because you're scared of your stop loss being hit, let's say, is pointless. Okay, so see this high here. As you can see here, I've placed the stop above that high. Okay, so that stop is above that high, and what happens is when price breaks above that area, I've put my stop loss there because I know I'm wrong. Okay, so I know I'm wrong. If price wants to come down and then come back up here, I'm more than likely wrong. The price is changing direction. So I always mark out my wrong zone. I place my stop loss just in or above my wrong zone. And if price hits it, I was wrong. Okay. So don't sit in a 6-7 hour trade just to be wrong when you can sit in a 2-3 hour trade and be right. Okay. Journaling everything and why it's important. I always encourage people to record and journal everything they do. So every trade you take, you journal, right? I journal every single trade. I can tell you my best trading days. I can tell you my best trading months. I can tell you my best trading seasons. I can tell you everything because I've recorded the data, right? So here's an example of some data from last year. So in May last year, I made 9.60%. I had a hit rate of 80% that month, and we only took 5 trades. The month later, we took 11 trades. I made 7%, and I had a 36.36% hit rate. I record everything. So I record, was it a buy or a sell? I record the time I entered, the date, emotion and confidence. I've started doing that this year, so it's non-applicable in these ones. Um, and I've also recorded when I changed accounts. So if I changed from a 10k account to a 20k or a 30k, I've put account change there. So that means account change. So as you can see, every time, well, you can't see the data after this, but every time I changed account or went to a bigger account, I got a little bit emotional, and started taking a few losses and break evens. And as you can see here, I've also recorded over traded, and that always happened. That was a sequence that happened every time I upped the amount in my account, which is fine. It's completely fine. You know, we still ended the month. We caught ourselves. We checked ourselves. I put where I was. So I was in Wales, or like I was just in Croatia. So the trades I've taken in Croatia, I put I was in Croatia. I put who was the president because this is important, based on the fundamentals. And to the right as well, there's other data, which is basically my strategy, my entry rules, etc. But I know the days and the times, so I can look at this and go, okay, every Monday I take a trade, it never works out. Or every Tuesday at 2 o'clock, it never works out. So I've got all of this data, and it's so important because this is how you become better as a trader, knowing what you're shit at, right? That's the important bit about recording trades, and this is why I always encourage people to journal their trades. You know, if so 9.60% is, so that was 9.6k that month, right? On a 100k, that's 7k, that's 3k, and I'm able to know all of this data and record all of this data because I understand long term that yes, if I was to record this month and get to the end of the month, that's not enough data. So I've got, I think on record, I've got this. So this is when I started journaling on here, but I've got books as well. I've got, I think about 300 odd trades under my journal, so I'm able to go back through all of them and go, okay, bum 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 bum. That's what I need to change. That's where it's not working out for me. That's what I could avoid. So once I started doing that, once I started journaling my trading, that's when I found consistency in trading. That's when I found changes, significant changes. Understanding yourself and not just the charts, guys. Understanding yourself in trading is the most life-changing thing. So if trading went to shit for me right now, trading has taught me so much about myself and so much about how the world works as well, right? So trading will bring out your demons, because trust me, you're going to face so many hurdles along the way. But that's why I'm here, guys. So don't forget, that's why I'm here. That's the premise of these lives. That's the premise of the Discord, is for me to support people through these things, right? Um, but I learned so much about myself. I learned that I have a massive ego. I learned that I hate being wrong. I learned that I had some gambling tendencies. I learned so much about myself through trading. Right, I learned how to become more patient. I learned so much just from trading. So if trading stops working out for me, or whatever reason I've got to give it up, I am so grateful for what trading has produced. So understanding yourself, right? So this is where I encourage people to do various different things, like read books, um, and try and be more self-aware. Journaling allows you to be more self-aware, but being self-aware in your day-to-day life, the things you do, the actions you take, the way you react to things, will allow you to make better choices on the charts, but also make quicker and what's the word I'm looking for? Basically, you will be a better trader overall if you can just be observant of your behaviors, right? So just master yourself. That is the key word here. Master yourself. So that's the end of the PowerPoint. Now I'm going to show you exactly how you can put all of this together and basically go off and start your strategy, right? So this is going to be what you guys need. So this is where you want to pay attention, because this is going to be the strategy you guys are going to use. Very simple, very basic. If it's complicated, guys, or something is triggering you where you're like, that doesn't make sense, please repeat that. You're not stupid. I'm just not explaining it well. So comment down below and I will try and approach the situation a little bit differently, right? So we use 3 time frames. Let me just make sure the screen, why isn't it going? So we use 3 time frames, right? We use the 4-hour time frame. Once again, we're going back to our slideshow for key levels and directional bias, right? So what have we got here? This is a trade I took yesterday, and I'm going to basically relive it for you guys so you can understand why I took the trade. So first of all, guys, if you've got your laptop in front of you and you've got TradingView open, you want to be adding the 200 EMA. Now, this is a good tool for beginners because it allows you to follow basic principles, and it also allows you to easily identify trend if you're struggling a little bit, okay? So the 200 EMA determines the market's trend, right? So look, once it's above price, it's bullish, right? We got higher higher highs here, here. So let's just mark them out so you guys can visually see them. Higher highs and higher lows. Okay. So once again, market is bullish, so we would be looking to buy in this situation. And look, price is above the 200 EMA, so it's supporting the bias. So it helps you identify the trend, right? So over here, go to, I'll show you how to add it to your chart. Go to indicators, type in EMA, and you'll get exponential. Ah, there it is. Okay, so type in moving average exponential. You want to click on it, Once you click on it, you'll have a little crappy little line that squiggles on your chart. You want to click into it and you want to change the length to 200. Let's make sure that's all default. Then you can change it to, so in style, you can change it to whatever color you want. You know, go yellow, go blue, go green, go pink, whatever you are comfortable with, just set it. And once it's on your chart, it's on your chart and it's go time. Okay, so it's on your chart now, nice and clear, brilliant. Price is below. Okay, so this is what happened last. Continue. That's not what I wanted to do. Okay, start new. Okay, so price came up to my 200 EMA, and I identified that the overall trend was bearish. Okay, so the behavior looked like it could potentially change because it started to push up and it took out this level. So if price comes down like this and it puts in that lower high, so we've got a lower high here, right? So this is the high, we've got the lower low, and then we got another lower low. So as you can see, that came back in to test this low, creating a resistance. If price breaks above, right, you're anticipating price to, I don't know why my chart keeps doing this, you're anticipating price to come back and then put in a new higher high. So once it breaks that level, that would be your key level. Once it breaks, you'd be looking to buy because the behavior of the market has changed. So the 200 EMA would probably do something like this. Okay, so prices come down, and if it pulls back and just continues back down, we are not looking to buy. We only look to buy once the behavior of the market has changed. So the behavior of the market changed because it put in a higher low and it put in that higher high and then it put in another high. Okay, so the behavior of the market has changed. So if it comes back down to here now, we would be looking to buy off that level and we take profit into there and we'd get our little 1 to 2. Okay, that's just an example. So that's pretty much what was going on here. Let me just quickly delete this. There's a quick way to delete this. There it is. Brilliant. So price came back and it took out this high, but it came into the 200 EMA and rejected because the 200 EMA is a bit like support and resistance. And I was like, okay, but we could still, now we're pushing up again, we could potentially take out this high and then we're in a buyer's market. If we take out this high as well, we're in a buyer's market, we're above 200 EMA and the behavior of the market has changed. What happened? We double rejected that level, which told me, okay, we still want to sell off, so let's keep seeking them sells. So I put my key level in as here because, as you can see, prices reject this a few times, quite a few wicks, and then another wick there, right? Then price started to move around. On Sunday there was a gap open, but don't worry about that. Gap opens happen because basically price still moves on the weekend, and then when Sunday market opens, you sometimes get a gap open. Those gaps 9 times out of 10 will be filled. So I was waiting for that gap to be filled. As you can see, it's just a price. Normally the candles are right next to each other. So if that candle closed there, the next one opens there. That one closed there, the next one opens there. That wasn't the case here. Huge gap open. So I was like, okay, we need that gap to be filled before I look for any trades. What happened was price came up, closed the gap, meaning price traded in that area. So it closed the gap, and now I was like, okay, if we reject to the upside again, I'm going to look to sell. And that's exactly what happened, right? So let me go back to where I placed that trade. Don't know what I've just done, but I've just done something. So I scaled down to my entry time frame, right? As you can see, price. This is another thing, guys. Don't be entering trades if price is different. So on the 4 hour, it's below. On the 1 hour, it needs to be below because we're supporting that bias, the main bias of the 4 hour time frame. On the 5 minute time frame, it's below. If it goes above, we do not want to be selling, especially if we get a strong push above the 200 EMA, right? So we do not want to be selling here because it could bounce off that 200 EMA like support. And once again, we've just taken a loss for the sake of it. So price started to move sideways. Let me try and get a better clear view for you guys. Price started to move sideways. Okay. Still looking to sell because I'm still paying attention to the 4 hour time frame. We're still below 200 EMA. So what I'm waiting for is a reason to sell this chart. And I'm also looking for price to come below that 200 EMA. Okay. Come on, you're taking your time a bit. So what happened was price started to consolidate. And I like this. I like this consolidation, right? I like this because this is telling me price is tired of pushing in one or the other direction. So if price breaks below, we're going to look to sell. If it breaks above, I'm not interested. Okay, now we're really close to this 200 EMA. Gotta be careful I don't accidentally, there we go, push it through. Okay, so we broke down to that low. We broke down and we put in a, oh, something disappeared there, isn't it? Gotta double check now, this is the right trade I'm looking at, yeah. But basically, price is broken down and it pulled back. I'll show you the actual trade I took. Just get it to, maybe I traded that consolidation. I can't really remember right now. Let's get price action all the way out. Let's just get it all the way out there. Ah, okay. Okay, this is where it's coming in. So I was looking at taking a trade down here. We never got a trade over here. And then once again, we came up and we started to consolidate in that area. So we had this bullish market here. Price started to consolidate again. We fell back below 200 EMA. And we were looking at going into this swing low here. So price broke out, pulled back, and as you can see from that very strong candle there, so this is showing there's momentum in the market because we've got a strong close in the downside direction, right? So price is pushed down, come back and closed off again. So I entered my trade right there. I put my stop loss just around my wrong zone. Once again, if price came up here, I'm wrong. So I do not care. Get me in and out. I then set my 2% target. 2% target. Once again, our target's here, but am I going to overextend there? Am I going to overextend? No, I'm just going to go for the 2%. And I'll show you the actual result as well of this trade. Dun, 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 dun. There it is. And then I was in, and price came down. And at 2 o'clock in the morning, I had a notification telling me that I had made £1,000, £2,000. So it was over and done with within a few hours. If you go back over that, that is 1, 2, 3, 4, 5, 6, 7-ish hours. 7-ish hours it took me to make that money, right? And I was asleep the entire time. I had set my stop loss. I had set my take profit. Game over. So now I know that was a lot of data to look at, but I'm going to show you a simplistic version right here. Right, so on the 4 hour, trend is pushing up. So we want to look. Why are you doing that to me? We want to look to buy. Okay. On the 1 hour, price is going to look a little different because there's a lot more data in that 1 hour, and then 1 hour candles. So that little pullback you see here may have this, and then you may have that. Okay, so that's what you're seeing on the 1 hour time frame, also supporting the buy. Okay, so price is supporting a buy, and then obviously we've got 200 EMA right there. 200 EMA looks a bit better on the 1 hour. Then we go down to our entry time frame, right? So let's just say we are going to enter price when it breaks this high. Okay, so that's like, should more look like that, to be fair. So once price breaks here, we're going to look to buy. So on the 5-minute time frame, we're going to zoom in now as if we got binoculars. We're going to zoom right into this section of price action, right? So we're going to ignore all the big swings. We're just going to zoom in on that price action there. So on the 5-minute, what you've got is you've got that big leg up, and then it's consolidated. Okay, it's consolidated in there on the 5-minute. We're not interested in the consolidation, but it's a key indication because we're at this level now. So this little bit of price action is just under this level, which is this resistance level here, right? But we're looking for buys because the market is in that buy sequence. So when price breaks above this level, we are onto a winner, right? This is where we're like, okay, we've got the initial break to the upside. So what do we want? We want to put a set of rules into play, right? So we've got 200 EMA lined up. It's below price on all of them. We're looking for buys. Price has broken this high here, right? Price has broken this buy here. Kind of looks a bit like that, to be fair. So we're going to put a set of rules in place. First rule is we're above the 200 EMA. Second rule is we're waiting for a retest and a rejection. So we want a candle that looks like the one we talked about earlier, that doji candle, right? So if we get a nice rejection candle there, that's our second confluence, or third confluence, because the first confluence is all 200 EMAs are supporting the buy. The second confluence is we've broken that level. The third confluence is the rejection with a doji candle and a nice wick. And the third confluence is the re-break of that first break. Okay, so then we enter our trade on the break. When the candle closes, remember, candle's got to close. We put our stop loss just below this wick. So let's just say the wick is there. Okay, we put the stop loss below, and then we set our take profit for our 2%, which is this 2.00. That means 2R, right? Now, once you place this tool on your screen, guys, you will have a series of numbers, but mine's really simple. So click on it, go to style, and then go to style and click compact stats mode. Once you click on that, you'll see there's a lot of data there now, but once I click on it, it simplifies everything. Okay, see that? Brilliant. Once we've got that, we'll have how many pips to the upside. So ignore the last one, right? We just want to look at these two, and obviously if there's a number in front of that as well. But this one here, so this 2 is, ignore that, but this 1 is 1 pip, and this 6 is 6 pips. No, sorry, 60 pips. So 1, 6. So that's 1, it goes all the way up to 9. That's 6, goes all the way up to 9, so that's 90. Then you got 100, then you got 1,000, and so on, right? but we're going to be paying attention. So 61 pips, and to the downside, we've got 30.5, right? So we're just paying 30, so it's 10 points, and that's 1 point. 30 points. Stop loss. Now, going back to what I was talking about earlier. So we open up our, I'm hoping that we can just scroll through this. We can zoom in. So we open up an app on our phone called Stinu, and this will do all the calculations for us, right? So you'll put your account balance in, you'll put your risk amount, so you want to put this at 1% or 0.80. Then you put your stop loss, so your stop loss will be 30, and numbers there. Remember, that's each one of these points is 10 points, so 10, 20, 30. That's 0, so it's 30. So you want to put 30 in there, then you click enter, and it will take you to, why has it done this to me? It will take you to this screen. When you get to this screen, it will ask you what pair it is. So we're Great British Pound US dollar. So you click Great British Pound US dollar, then you click calculate, and then you'll be taken to this screen. Once you get to this screen, we've got our 30 pip stop loss, and this number here we want to type into MT4. Okay, so let me just open that again. I don't know why I closed that. So this 0.80 we would type into here in our lot sizes 0.80. Then you click whatever it is, buy or sell. We're obviously doing a buy example, so you click buy, and that will be the set risk of 1%. Don't forget, guys, there are fees on certain brokers as well, so you do need to consider them. Just pay attention to the numbers, put them in correctly, and then obviously you put your stop loss and you take profit. If you're on iPhone, it does look a little bit different, but not overall. It's not a big difference. So now, what do? We've placed our trade, and we just wait for it to run. And once it's hit take profit, you can get out of your trade. You'll automatically be out of the trade, and you're done for the day. Don't go chasing any more trades. If you've made 2% in a week or 2% in a month, that is brilliant. Okay, don't be chasing 30, 40, 50% a month, because if people could genuinely, I know there's people out there that say they can make 50, 60% a month, they would be billionaires. Okay, one of the best traders in the world, Jesse Livermore, I think his name is, and you know, he's broken so many records. His average yearly performance is 66.6%. Warren Buffett doesn't even achieve these kind of numbers. Okay, so these people talking about all these big numbers, 90% of them are full of shit, right? So, guys, another thing you can do, right? Risk management. Managing your trade while it's live. Once price gets to about 50% of your take profit, right, you can set an alert. You can do that by right-clicking on Trading View, and you can click, we can't do it right now, but I'll show you. It says add alert. You just click add alert, and you'll have a notification if you've got the app on your phone. You can run over to your computer, and what you do, right, is if price puts in price action, so it puts in that swing, that high or low, and then it pushes back above your 50% range, you can move your stop loss to break even. So if it does come back on you like hard, you will be stopped out of break even. You won't lose money, you won't make money, but it's a way of managing risk. But make sure there's price action. Don't just move your stop loss to break even because it's got the 50%. You've got to give time to breathe, because what can happen is price can come back to towards your stop loss and then continue up. So you want to see some sort of price action in there before moving your stops. Okay, you don't want to just move your stops because it's at 50%. But yeah, that's the basic principles of trading. I've noticed Ashley has put, why was your entry there? Ash, I'm not going to dive into why my entry was there because it's irrelevant to the people watching. That trade I took yesterday was a part of my strategy, and I don't want to give you guys too much information overload because it's just going to confuse you. But it's the principle. The principles are still there. I still followed the basic rules of being below the 200 EMA. I still followed the structure, and I still followed what the markets were providing. Because what you don't want, guys, is to have 6 different entry strategies, and 12 different strategies, right? You just want to stick to um, as few pairs as possible, 2 to 3 pairs maximum. I know this strategy works well on Great British Pound, US dollar, and US dollar CAD, but you don't want to have 50 different pairs, because you're going to have a congestion of information that you're not going to know what to do with it, and you're going to be trying to pick positions, and then what you'll find, if you've got loads of pairs, 7 different trades will line up at once, and you go, well, which one do I take? Which one's the best option? So don't give yourself that problem. Keep your pairs minimum, 2 to 3 pairs. Avoid gold if you're just learning, guys, because gold is very, very hard to trade. It's not hard to trade. It's just it doesn't respect doesn't respect the rules of um, like other pairs do. You can trade various different assets, but I don't know what that noise was. Going back to your pairs, right? So whatever pairs you pick, understand the fundamentals, even if it's just the basic fundamentals. What moves the pound, right? What moves the pound? What moves the dollar? What moves? So for me, like, what moves the Canadian? Well, oil heavily moves the Canadian. Gold supports the pound quite heavily as well. So I pay attention to these assets. I've also got the US 30 for the US economy stats. So if the US 30 is going up 9 times out of 10, the dollar is going down. But they seem to be on a kind of an equilibrium at the moment. I've got the VIX volatility as well. That's a bit more complicated, which we'll get into at another time. Right, going on to the pairs, guys. How does it work? So if you don't understand, Great British Pound and US dollar, if the pound is showing strength, right? So this is the base currency. The pound, whichever is first, is the base currency. Okay, so Great British Pound is the base currency in this pair. So if the Great British Pound is showing strength against the dollar, the pound will go up. This pair will go up. Okay, so if the pound is showing strength against the dollar, it will go up. If the dollar is showing strength against the pound, this pair will go down. Okay, because the dollar's outweighing the pound. US dollar CAD, same principle. US dollar is the base currency. So if the Canadian gains strength, this one will start to come down. So if we see oil prices surge, Canadian gets a bit of stimulus, a bit of support from its connection to oil, then we will see US dollar CAD come down because the Canadian dollar is outweighing the base currency. Okay, so that's how in simple terms, that's how it works. There are other assets you can trade, guys. I would avoid crypto. Like, I've got these here because I personally hold them. But you can obviously go into your Forex and you can pick some. You can click the Euro US dollar. JPY pairs do trade a little bit like gold. They do respect levels a bit more, but they do trade a little bit like gold with the big swings. So it depends what kind of person you are, how prepared you are to take on them kind of issues, um, and conquer them, basically. But if you've got any questions, guys, I'm going to take a 2-minute window to see if anyone's got any questions before we have a little look on to what is next. What is the time? We've been going for an hour. Not bad, not bad timing. Okay, it doesn't look like we've got any questions, so we're just going to move forward and have a little look at what else we could potentially be looking at. Have I got anything in the screenshots? No. So, right, apps, guys. This is what we're going to be using for everything, right? So we're going to use Trading View, which is what we're on right now. And this is for chart analysis. Oh God, I think that's spelled right. Don't know. Don't care. Right, MT4 or MT5. Um, you you can use either of these platforms. This is for placing trades and connecting to broker. And then Stinu, guys, this is for calculator. You can use other ones. I use Stinu, it's the best, it's the easiest, the simplest. Calculator for working out lot size for trades. And then you've got Forex Factory for major news. Right, going on now to, so you've got the platforms here, which is space this out so you guys can write this down if you haven't already. Okay, so write them down, guys. These are going to be your primary tools and programs to use while trading. One thing you don't want to be doing as well, guys, is another thing that so many people do wrong, is they try trading from their phone, and you don't get the full price action. You can't see that much information on your phone. So I 100% recommend, if you're going to do this and you want to take this seriously, do this on a laptop or a big tablet, right, or a computer. For your analysis, you can place your trades on your phone, because once you've set your POI, your point of interest, you can place your trades on your phone, because it's easy to see price action on your phone when you're only looking at a few candles. But when you're trying to figure out the overall bias, the direction, the key levels, the targets, it's so much harder to do it on the phone, and you end up making errors, and it's a bad habit to have, right? It's a really bad habit to have. Anyway, let's go now to the next platform. So this is Forex Factory, right? This is where you're going to find all of the information you need to understand to a basic degree. Okay, so if you hear the words like BOE or ECB or PMI or CPI, you need to know that these red folders, which you can click on here, you can get a little filter once you've signed in. You can click on here and you can set the folders you want to see. Don't really pay attention to the yellow ones. I rarely pay attention to the orange ones. It's mainly just the red ones that we want to be paying attention to. Another thing that happens on the first Friday of every month, we have a thing called non-farm payroll, which has weirdly been removed from here. Obviously, we've got the government shutdown at the moment, which is causing some complications because a lot of the data isn't getting out because there's no one there to crunch the numbers. So we are experiencing a bit of a turbulent time in trading. It's a lot more difficult for beginners to get involved because the markets are a bit shit. Even the best of us are being affected by some of these things. So yeah, it's important to understand the basics. Interest rates move the market. You need to know, what the local banks' interest rates are. You need to know what the banks of the currencies you trade in. So if you're trading the US dollar, you need to know what the banks are doing. What's his name? Jerome Powell is deciding out there. So there's so much going on here. Don't let this overwhelm you. It's not a killer. Just understand that you can click on these, right, and go, okay, what is BOE, Government Bailey Speaks? And it will go, why, as a head of central bank, so he's the central bank, which controls short interest rates, he has more influence over the nation's currency value than any other person. So basically, it gives you an explanation of what it's about, and also it gives you usual effect, more hawkish than expected for is uh, is good for currency. So it gives you the outcome as well. Now that's a speech. If we go on to um, like numbers, you will have usual effect actual. So this is here actual, forecast, previous. Actual, you'll have here less than forecast is good for currency. Okay, so this is their forecast. If it's 226, it's good for currency, is what they're saying. So if it's 226, it's likely that the dollar is going to rise a little bit. But not all of these red folders move the market as much as others, such as interest rates, big decisions. So pay attention to these things. Come on here every Sunday and be like, okay, I'm looking at taking a trade. Could I potentially be affected? You don't want to place a trade 2, 3, 4, 5 minutes before a news, and you don't want to place it just after. You want to give it some time to cool off. So this is a very important site to add to your bookmarks, and it's also a very important site to pay attention to. Okay, it gives you everything you need to make sure you don't go make dumb decisions, because your trade may line up. This is a shit situation of trading. Your trade may line up just before news comes out, but you cannot take that trade. If you take that trade, you are risking being completely wrong and putting yourself in a situation where you can lose money. So pay attention, guys, to all of these things. Don't forget those websites. I think I've deleted them, haven't I? Of course I did. Don't forget, pay attention to those websites. And yeah, I hope you've enjoyed. It's been an hour and a half. We've done decent. And thank you everyone for tuning in. I'm hoping now this goes live. I'm going to quickly end the stream and try and move it on. But if you've got any questions, jump over into our Discord. We've got, let me just quickly show people. In the Discord, we have got, uh, you know, our subscriptions. We've got socials. We've got education for beginners and for more advanced trading. There is going to be more stuff added over time. We've got updates. We've got our weekly forecast where we share absolutely everything for the week. We've got new content that's just been added in. We've got a giveaway running at the moment, so there's a chance to win a 10k funded account. So all you got to do is react to the post. You just quickly give it a love heart, or down here, give one of these ones, and stay active in the group. And once you're active in the group, that tells me you're interested and you're in for the chance to win. But then, if you've got any questions, beginners chat and beginners questions, come in here and be like, hello, I didn't understand a word you said in that live, and I will answer. I'm trying to do another live. no, but if you've got any questions, guys, put it in the beginner section. It just keeps everything away from the general chat of the more experienced traders, and it gives you a section to go to as well. Okay, so thank you once again. I'm going to try and publish this video now so everyone can come back and tune in. If it was a bit too much for you, or there's something I didn't explain very well, please just ask, guys. I genuinely will not be offended if I have done a shit job at explaining something. If I've gone too fast, if I've got ahead of myself, just let me know and I will do my best to give you that time and go over whatever you're struggling with. I am here 24/7 pretty much. So you leave a message, as soon as I see it, I will reply. I am here to support every single trader I can, from beginner to intermediate to advanced. So don't think you're being a burden. If I come across as blunt, it's because I'm just being straight to the point. I'm not going to give you any bullshit. It's going to be straight facts. If you're doing dumb shit, I will tell you you're doing dumb shit. So yeah, thanks guys for tuning in, and I shall catch you all in the Discord.